All right. Well,
your turn. The stocks.
Donks. Okay. All right. Well, there's a lot here. So many twists and turns. I couldn't narrow this down because there are so many things I wanted to hit on. So buckle up. We're going to go for a wild ride. The most thrilling story of the week involved a rowdy and undeniably clever group of Redditors who decided to take on Wall Street hedge funds who had been shorting the market. Now, the story revolves around hedge funds that short certain stocks, meaning they bet against certain businesses, and they make money doing it if their bet turns out to be correct. And when they predict that these companies will fail, there are all sorts of downsides that come along with that, aside from the fact that it doesn't actually provide any value to society. It also can help to accelerate the decline of a company when they put out their data arguing that the company is going to fail soon. Now, this type of negative analysis, again, unfairly accelerates the decline of small businesses. And in this case, companies like GameStop, which, to be sure, had some labor practices that I disagree with. But for the purposes of this discussion, let's put that aside and focus on what the heart of this story is. Small investors, also known as retail investors, finding an issue with these hedge funds shorting stocks and deciding to work collectively to fight back against them. And so one of the targets in this subreddit, Wall Street Bets, was a hedge fund known as Melvin Capital, which had decided to short the brick and mortar video game store, GameStop. And here's how.
But there is a story here beneath the surface of hedge fund, the big guys shorting this, and smaller players, retail investors buying it and making windfall profits, at least on paper.
At the expense of those short sellers. I mean, it's like a David versus Goliath story, or it's a storyline in the TV show Billions, or it's a Michael Lewis story novel. It's all of those things wrapped in one. It's so interesting. And people keep talking about it and talking about GameStop. Look, the fundamentals of the company have been rough here. They're not making any money. They've been closing stores. You see these big short positions in the stock. And then this Reddit board, this Wall Street Bets Reddit message board. It's almost like a populist trader uprising to support the stock.
So there are some caveats to that narrative, which we'll get to in just a minute. But before we do so, let me give you a little more detail into what the strategy was here by these Reddit users. Wall Street Bets publicly hatched a plan on the forum to buy and hold GameStop stock and GameStop call options in order to drive the price up so high it would create something known as a short squeeze. A short squeeze is when a price jumps so high that the short sellers, in this case Melvin Capital, are forced to buy back the stock to close out their position. So pretty early on, after they hatched this plan, it was pretty clear that Melvin Capital was in some trouble. The Redditors made the hedge funds pay for this risky shorting maneuver, essentially betting against the market value of the targeted asset, by collectively driving GameStop's share price up by as much as 1,700%. It's just absolutely insane. And it continues. This in turn forced those who bet heavily against it to cover their losses by buying back more stock, driving prices even higher. The sometimes 6, 7, and even 8-figure payouts earned among several users in this online pack quickly became the stuff of meme legend. And I personally recommend checking those memes out because they were hilarious. But this did, in fact, hurt Melvin Capital, brought them to their knees, and here's what that looked like.
This is really causing some issues for these hedge funds, specifically ones like Melvin Capital, who doubled down on their bet against GameStop and had a new cash injection from Steve Cohen and Ken Griffin. And that's because this narrative has emerged on Reddit that basically says we're taking on these hedge funds, that we're sort of the white knights coming in for these hedge funds that long have come on to, the financial news channels and done essentially what they say they're doing. So when you look look at hedge fund positioning, Melvin ones, I've been digging through what puts they have been taking off. So no doubt Melvin Capital is in a lot of pain. Everything from GameStop to stocks here in Europe, such as Evotech, which they're short. At the same time, hedge fund shorts in general rallied 15% over the past 2 days. That's their best session since 2012. And we see evidence that they're starting to have to unwind their longs in order to pay for the pain that they are seeing in these other short positions that are getting absolutely crushed. So now it's almost become this risk that if you're publicly coming out as a hedge fund and disclosing the stocks that you're against as one trader, as one Twitter user put it, you're at risk of getting Melvined. In other words, this Reddit army could really come after you. So this is truly a new and unique risk for hedge fund managers.
Now, as we go through this segment, I want you to really ask yourselves what the value is of hedge funds shorting certain stocks. What kind of benefit does that provide to society or to small businesses or businesses in general, right? What is the point here? Because if the argument is that the stock market isn't just a giant casino, well, then the types of bets and trades that are being made should have some value to society, right? But instead, shorting the market or shorting certain stocks does nothing more than provide an opportunity for the capital, the people who own the capital, to get that money to work for them more, right? So they just make more profit off of doing something that actually does have some pretty negative impact on society. And I'll explain that in even more detail a little later. But Wall Street Bets decided to expand the strategy to other companies. GameStock, Blockbuster, Bed Bath & Beyond. I mean, this is making me incredibly nostalgic. AMC. It's like some kids remembered their favorite places in the mall 20 years ago and decided to invest in them, wrote Mike Murphy on Twitter. And it's worth having a deeper discussion and understanding regarding the fury behind what kind of drove this strategy in the first place. The rage and anger that so many people on this subreddit have felt toward this system that has been undeniably rigged against them and certainly rigged in favor of people who are already with tremendous wealth and power. So let's talk a little bit about that rigged system. Now, CNBC doesn't typically have good conversations about why people are anti-establishment or why financialization is actually pretty awful. But every once in a while, they'll have a guest on who speaks some truth. Here's Chamath explaining exactly why people are so angry with the establishment.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and frankly a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family?
He's absolutely right about that. In fact, the topic of bailouts is a common one on this subreddit. One user on Wall Street Bet said this: "We don't have billionaires to bail us out when we mess up our portfolio risk and a position goes against us. We can't go on TV and make attempts to manipulate millions to take our side of the trade. If we mess up as bad as they did, we're wiped out." And that comment is absolutely true. So let's take a quick trip back to 2008 as the mortgage crisis was underway, as people were being pushed out of their homes, foreclosed, and as the same Wall Street firms that got us in that mess in the first place were getting massive bailouts. Now, the 2008 mortgage crisis led to a world of pain for ordinary people who ended up losing nearly half of their retirement savings and their homes. Now, it wasn't just that these banks were giving out toxic mortgages that people would then later default on. What they were doing was bundling those mortgages up into something known as mortgage-backed securities, which were then traded in the markets. And so there were people who were unfortunately invested in those toxic mortgage-backed securities. And once the economy collapsed, that's when pensions and retirement accounts were impacted negatively. Now, when it comes to those foreclosures, by September of 2010, 23% of US homes were underwater, meaning that people owed more on them than what they were actually worth. And this did lead to a massive wave of foreclosures. For instance, things got so bad in Miami-Dade County that the area was called the Repo Riviera. Watch.
We have 110,000 properties for sale in South Florida today, 55,000 foreclosures, 19,000 bank-owned properties, 68% of the available inventory is in some form of distress. They need someone to clean it up.
What's the name of your company?
It's called Condo Vultures Realty.
What does that mean?
That in times of distress, in times of downturn, there's opportunity. And, vultures clean up the mess. A lot of people seem to think they kill, but they don't actually kill, they clean.
The killing in Miami was done by the developers back when it seemed that the party would never end. They sold hyper-inflated condos at what amounted to real estate orgies, sales parties for invited guests who were armed with option arm and Alt-A loans.
There were red ropes outside. They had hired cameramen and they had hired photographers to almost set the scene of a paparazzi.
They were hiring fake paparazzi to make the customers feel like they were special.
You were selling a lifestyle.
What role did these exotic mortgages play, these Alt-A's and the option arms?
They were essential. They were necessary. Without the Alt-A or option arm mortgage, this boom never would have occurred.
It never would have occurred because without the Alt-A's and the option arms, many buyers never would have qualified for a loan. The banks and the brokers were getting their money up front in fees. So the more they wrote, the more they made.
And it was an absolute disaster. Just so you know, the option arm mortgages would give the borrower several different options on how much they would pay for their mortgage every month. And if they chose the cheapest option, as many people did, what they didn't realize was that that amount covered 0% of their principal and didn't cover all of the interest that they were supposed to pay in their payment. And so as a result, their payments would balloon to astronomical levels to the point where people weren't able to pay their monthly mortgage. As a result, people were foreclosed on, people lost their homes. And what happened to the banks? What happened to these financial institutions that committed fraud in many cases, but more importantly, did not disclose the types of mortgages and the types of terms excuse me. They didn't disclose what these mortgages and the terms associated with these mortgages entailed. Well, the banks needed a bailout because when these people default on their loans, the banks are unable to collect payment. And so what did the government do in response to this absolute disaster? Let's take a look.
I was not surprised by the public backlash because a year after we've spent $1 trillion+, people are still going to feel worse. And all they see is that there's a whole bunch of money going to the folks who perpetrated some of these terrible things.
Financial crises are often followed by populist reaction, but I think it's important to understand, though, that there's some very long-term trends in the United States, including the stagnation of wages, the reduction in upward mobility for people, lack of opportunity. There's a whole number of things which have contributed to the present moment. Financial crisis didn't help that, but it obviously exacerbated some underlying tensions in the United States.
Two of AIG's former CEOs were grilled about a retreat where only a week after being bailed out by taxpayers, its executives spent $440,000 on oceanfront rooms, rounds of golf, and trips to the resort spa and salon.
They were getting their manicures, their facials, their pedicures, and their massages, while the American people were footing the bill.
How do you not feel absolute rage about that, especially if you're one of the ordinary Americans who unfortunately had one of those toxic loans, found themselves underwater, and then later had their home foreclosed on? Now, in 2009, the United States had nearly 3 million foreclosed properties. That's a 21% increase from 2008 and a 120% increase from 2007. And by the way, that bailout for Wall Street infuriated so many people that they actually did organize, they did mobilize, and we saw protests not just throughout the country, we saw protests throughout the world, and it was referred to as Occupy Wall Street. Now, in New York, as these demonstrators were being forced out of Zuccotti Park, which is where they were occupying, the Wall Street bigwigs celebrated and mocked them. And this video has gotten quite a bit of attention on Reddit. Let's take a look. They also threw some job applications at the demonstrators in Zuccotti Park as they were being forced out of the area. So you can imagine that those types of instances are memorable for people, to say the least. And if you read one of these open letters in the subreddit Wall Street Bets, you'll see that that resentment has been festering for good reason. One user wrote this: "When that crisis hit our family, we were able to keep our little house, but we lived off of pancake mix and powdered milk and beans and rice for a year. Ever since then, my parents have kept a food storage and they keep it updated and fresh. Do you know what tomato soup made out of school cafeteria ketchup packets tastes like? My friends got to find out." And the open letter also addresses Melvin Capital, a hedge fund, which is certainly part of the disgusting system that led to so much pain and suffering, not just in 2008, but for years after that, the type of speculative Wall Street casino type behavior. The user writes to Melvin Capital, "You're a firm who makes money off of exploiting a company and manipulating markets and media to your advantage. Your continued existence is a sharp reminder that the ones in charge of so much hardship during the '08 crisis were not punished. Your ilk were bailed out and rewarded for terrible and illegal financial decisions that negatively changed the lives of millions." So as you can imagine, watching the demise of a hedge fund like Melvin Capital, a hedge fund that was shorting a company like GameStock, which no doubt has some nostalgic value to millennial Redditors, you can understand why this story was thrilling for so many. Now, it was one of the rare times where it appeared that the powerless worked together collectively to make greedy hedge funds bleed literally billions of dollars. Now, as a member of the left, like, we shouldn't see this as the way we win, right? This isn't what we want. We don't want manipulation. We don't want financialization, right? This whole system is corrupt. This whole system is pretty disgusting. And even when it comes to the Wall Street Bets side, there were some hedge funds that were able to benefit from this. But in the meantime, the idea of people working together, small investors working together to basically push for and successfully achieve the demise of a hedge fund is thrilling. It's exciting. And you can understand why so many people have been paying attention to this story. Now, one thing to keep in mind about capitalism is that as soon as you do something that effectively holds the holders of capital accountable, well, the system will run interference and make sure to protect these hedge funds. And that's exactly what happened. Apps like Robinhood stopped its users from trading GameStop, AMC, and other Reddit They're referred to as YOLO picks. A notification popped up telling Robinhood users that they could close their position on GameStop stock, but they can't buy any additional shares. And by the way, Robinhood did confirm that they were doing this through a blog post where they wrote, "We continuously monitor the markets and make changes where necessary. In light of recent volatility, we are restricting transactions for certain securities to position closing only. We also raised margin requirements for certain securities." And, included in that, you had BlackBerry, Bed Bath & Beyond, Express, all sorts of companies that were being shorted by these hedge funds. Also, several large trading platforms temporarily halted trading on the affected stocks. On Wednesday of this week, the New York Stock Exchange halted trading of GameStop and AMC, and Canada's trading regulator halted BlackBerry. TD Ameritrade restricted users from trading GameStop, AMC, and other stock, but was not specific about a timeline. And here's what the notification looked like for people who were trading on TD Ameritrade. And so there's also some indication that Robinhood went out of its way to further manipulate the market on behalf of these hedge funds by selling shares on behalf of its small investors. So you might have seen some of these posts on social media where users took a screenshot and basically revealed to the world that their shares were being sold without their consent. And by the way, there were even politicians who very transparently said that they wanted to run interference and stop these Redditors from doing what they were doing. Secretary of the Commonwealth of Massachusetts, William Galvin, even suggested that platforms should halt trading for an entire month for the affected stocks. And in response to all of this, a class action lawsuit has been filed against Robinhood. This was first mentioned on Twitter. First class action against Robinhood just filed in Manhattan federal court hours after app restricted individual retail investors from buying GameStop shares. Plaintiffs allege illegal market manipulation while Wall Street Bets users denounced the app. And this is what the lawsuit looks like. The most relevant part is, of course, the second bullet point there that mentions that Robinhood purposefully, willfully, and knowingly removed the stock GME from its trading platform in the midst of an unprecedented stock rise, thereby deprived retail investors of the ability to invest in the open market and manipulating the open market. And that brings us to the final part of this discussion, and that is the criticisms toward Wall Street Bets for manipulating the market, as if market manipulation isn't something that's been taking place for decades. Market manipulation has been a strategy used by the rich to benefit the rich. And so, as the New York Times points out, when it comes to Robinhood, the company's primary customers are not its users, but actually other financial institutions. Just last month, the Securities and Exchange Commission fined Robinhood $65 million for trying to keep that income stream hidden. So what people didn't know in the beginning of this story was how hedge funds were actually working with Robinhood by buying data of these small investors who use Robinhood to trade. And then they use that data to make decisions of their own, decisions that ended up being incredibly lucrative. The world's largest asset manager, for instance, BlackRock, whose 13% stake in GameStop may have delivered a $2.4 billion windfall and happened to find itself on the winning side of the GameStop trade. By Wednesday, the private equity giant Silver Lake had gained $284 million from AMC mania, and rich people own a vast majority of stocks anyway. So yes, the David and Goliath narrative is an appealing one because so many people want to see consequences for Wall Street, consequences that our lawmakers have refused to really implement. And you should also compare the reactions that we saw from two progressive members of our Senate. Why don't we start off with Bernie Sanders and his reaction to all of this? This is the correct reaction. The business model of Wall Street is fraud. Again, let me repeat that. The business model of Wall Street is fraud. Financialization is a huge problem that needs to be addressed because that is the root of the problem here. Elizabeth Warren's response, though, left much to be desired. Casino-like swings in stock prices of GameStop reflect wild levels of speculation that don't help GameStop's workers or customers and could lead to market instability. Today, I told the SEC to explain what exactly it's doing to prevent market manipulation. And while, to be fair, Senator Warren has mentioned the market manipulation done by the rich and the powerful in the past, for her to immediately spring into action because of what's happening with a subreddit is, I'll be generous and just say disappointing, but I would go further than that. Because the truth is, market manipulation has been aided and abetted by our federal government. Let's focus on the Federal Reserve, for instance, which just pumps money into failing banks and failing corporations to prop them up. This practice, which really exploded after the 2008 economic collapse, is called quantitative easing. And this is what it is. The United States Central Bank has pledged unlimited financial assets or asset purchases to sustain market liquidity, increasing its balance sheet from $4.2 trillion in February to $7 trillion today. While the vast majority of these purchases have been limited to U.S. Treasuries and mortgage-backed securities, the Fed's pledge to bolster the corporate bond market has been enough to spur a frenzy among investors for bonds and stocks. So the actions of our federal government has led to artificial inflation. The Federal Reserve has not bought stocks as part of its financial stimulus programs, but its near zero interest rates and credit support for large swaths of corporate America have driven yield-hungry investors back to the equity market. So this is part of the bailout system. We saw quite a bit of it in the beginning of this pandemic, where ordinary Americans had to sit around and wait for Congress to pass any relief through the CARES Act. In the meantime, the Federal Reserve is like, we're going to make it rain. We're just going to print this money. We're going to hand it over to these banks. We're going to hand it over to these failing companies, and we're going to prop them up. And it's incredibly frustrating to see this happen more and more as the solution for the failures of financialization and capitalism, not just here in the United States, but across the world. Since 2000, for instance, the 500 large companies that make up the Standard & Poor's 500 stock index have spent $8.3 million buying their own stock to boost its price, which, by the way, is also another form of manipulation. Over half their profits over the period and equal to almost 20% of business investment over the 2 decades. And so when you hear this argument about how it's all about free market capitalism, it's supply and demand doesn't apply to this system where, again, you have the Federal Reserve offering up cheap money to these companies, when you have these massive tax cuts, which are sold to the American people as a way in which we can create new jobs or increase wages. Of course, that never actually happens. What ends up happening with those tax cuts is whatever money the wealthy and these corporations save from those tax cuts gets invested into stocks. They buy shares of their own company, thus artificially inflating those shares. And it was something that was very apparent after Trump managed to pass his tax cuts for the wealthy in 2017. That was when he slashed the corporate tax rate from 37% to 21%. And did they create new jobs with those tax savings? I don't know. Let's take a look.
When our businesses pay less in taxes, they reinvest that money into their companies.
But according to the Nonpartisan Congressional Research Service, that's not what happened. The CRS studied the effects of the new tax law a year and a half after it passed, and they found very little growth in wage rates among ordinary workers. What they did find was evidence for a record-breaking amount of stock buybacks, with $1 trillion announced by the end of 2018.
Doesn't seem like they created many jobs with that, did they? But again, they did buy shares of their own stocks. And why is this system in place anyway? Like, why do we keep dealing with this failing system that picks winners and losers, that allows individuals who are already incredibly rich and powerful to continue manipulating the markets without any government intervention. Well, corruption is a problem, and we do have conflicts of interest among the very people who are allegedly serving our best interests, our lawmakers who consistently vote in ways that continue to deregulate the market, who continue to provide all sorts of tax cuts and benefits to the wealthy. And one really good example of this is House Speaker Nancy Pelosi, a Democrat who claims that she really does worry about being able to feed the children in America. But when it comes to Wall Street regulation, she has a vested interest in keeping things deregulated. Let's watch.
I wanted to ask you why you and your husband, back in March of 2008, accepted and participated in a very large IPO deal from Visa. At a time there was major legislation affecting the credit card companies making its way through the House. And did you consider that to be a conflict of interest?
I don't know what your point is of your question. Is there some point that you want to make with that?
Well, I guess what I'm asking is, do you think it's all right for a speaker to accept a very preferential and favorable stock deal?
Well, we didn't.
You participated in the IPO.
Well, I have many
and at the time you were
investments, but
Speaker of the House. You don't think it was a conflict of interest or had the appearance of a conflict of interest?
It only has the appearance if you decide that you're going to have elaborate on a false premise.
Absolutely awful, and it's not a false premise. We also learned that early on in the pandemic, before the American people were informed on the severity of coronavirus, our Senate lawmakers had a private briefing where they were given all the intel about the severity of the pandemic. And guess what several of those lawmakers did? They turned around and they sold stocks that they knew would be negatively impacted by the pandemic, and they bought shares of companies that were tied to telecommunications or any type of business or technology that's needed to work from home. So that type of behavior runs rampant in government. The entire system that we're seeing right now in Wall Street is in fact rigged against the little guy. And while it might be thrilling and exciting to see the demise of a hedge fund or two, the real question here is, what are we going to do to completely throw out this system? Not reform it, throw it out. Because the fact of the matter is, this is not a system that has benefited people the way that it's been sold to the public. There should be no reason for allowing hedge funds to short certain stocks. There shouldn't be a system in place that allows the Federal Reserve to just pump money into failing companies and allow them to prop these companies up. And there shouldn't be a system in place that continues to provide tax cuts for the rich so they can then turn around and buy shares of their own stocks in order to artificially inflate the value and pay themselves out later. This is a huge problem, and it goes far beyond what I've seen discussed in the mainstream press. And I thank you guys for giving me the opportunity to do a lengthy segment explaining why.